All right, folks, welcome to the Public Podcast. I'm your host today, JD Durkin. We are here with you to discuss all things Nvidia. Yes, Nvidia, the recent excitement around the future of artificial intelligence. It has certainly been the story of the last couple of weeks. As always, don't forget to like, comment, and subscribe to our YouTube channel for more in-depth interviews to help keep your portfolio on track. Today, we are joined by Angelo Zino. Angelo is Vice President and Technology Equity Research Analyst at CFRA to discuss all things, well, Nvidia. Angelo, thanks for being here.
Thanks for having me.
Okay, so obviously let's talk about this huge pop that we had in the stock last week, and then obviously earlier this week. Nvidia did briefly welcome itself, so to speak, to the $1 trillion market cap club, albeit a bit briefly, after guiding second quarter revenue of $11 billion, up 60% year over year. Angelo, first break down for us what really led to the impressive numbers that we saw in the last earnings call, as well as expectations going forward.
Yeah, listen, I think this was it's been in the making for quite some time at this point. I mean, Nvidia has kind of been working at becoming kind of this unbelievable kind of AI platform provider in the data center. And we're kind of finally starting to see it come to fruition. ChatGPT was, of course, that iPhone moment in our view. And as you kind of look here over the last 90 plus days or so, we've seen essentially the entire enterprise space essentially kind of do a full 180 and kind of now place all their emphasis in large language models and look into kind of AI initiatives within their platform. So when you kind of look at that here, the only way you can kind of really create these large language models right now, at least successfully, is with NVIDIA's GPUs. And for that reason, I mean, you've kind of seen this unbelievable kind of guidance that you just alluded to and pop in the stock price. I think the question at this point is how sustainable is the revenue run rate that we're seeing right now in NVIDIA? I think that's what everybody wants to know as we kind of go here, look out here into the second half of the year and into calendar 2024.
Angelo, how sustainable is the revenue run rate? Let me ask you that question. I mean, give me your sense on that answer. I know that's one of the many things that's really being talked about right now, but if you had to kind of dig underneath to answer your own question, I wonder what that answer might look like.
Yeah, no, and I think it's a great question, right? So when we kind of look out here for NVIDIA, it's extremely difficult to kind of look out and try to, guide or try to project any single quarter here. And what we've told investors here, especially with a company like NVIDIA, listen, over the last 5-6 years, we've seen two instances where the stock has had 70% plus drawdowns in the stock price in calendar 22, and of course, kind of the crypto kind of collapse back in 2018. So when you kind of look at that, I mean, there is always potential to kind of get into the stock at lower price points. So when we look out at this company over the next couple of years, we are believers that this is a company that can kind of grow their earnings trajectory at a compounded annual growth rate of about 20 to 25% annually here over the next 3 to 5 years. Now, that doesn't necessarily mean that we could potentially see some sort of softness after the next quarter or two in the sense of some sort of digestion from cloud providers. But that said, I mean, listen, there is so much runway for this company here over the next several years. And to kind of Jensen Huang's comment, this is only the tipping point right now because every single industry is going to need to adopt AI. And we haven't even talked about, autonomous vehicles where, that's more of a 25, 26 type of opportunity for a company like NVIDIA, which, NVIDIA has kind of alluded to having even, a potential addressable market of about $300 billion. So there is enormous potential here for this company. As far as the second half is concerned, we think the run rate can be sustained, but it's very difficult, we think, to kind of get to a significantly higher run rate than what the company alluded to here for the July quarter.
How much of this do you think is NVIDIA being uniquely positioned to capitalize on the shiny thing, right? There's something like a 77% skyrocketing increase of generative artificial intelligence mentions by executives and S&P 500 earnings calls for the last quarter. You know as well as I do, we've seen iterations of this. We had the cryptocurrency boom, and everyone wanted to talk about blockchain, and then everyone wanted to talk about the metaverse, and now everyone wants to talk about AI. And I wonder how much of this you view is authentic to NVIDIA's natural progression and growth based on their years of investment to get to this point, and how much of it is being arguably the most important name to capitalize on the shiny thing phenomenon right now, working its way through massive companies in the S&P.
Yeah, so listen, I think there's a little bit of hype going on in terms of this AI play right now. Clearly, I think you have to be extremely selective in terms of how you want to play AI right now, especially given the recent run we've had specifically on the semiconductor side of things over the last 2 weeks. Now, when we think about, and I'll tell you, just last night alone, I was listening to an HP's earnings call, both HPs, kind of citing AI numerous times. HP Q kind of alluding to an AI PC. Then you have HP Enterprise kind of talking about opportunities on the server side of things in the cloud. But when you kind of think about it, right, the names that are going to perform the best are the companies that are attached to compute intensity, because that's really what AI is all about right now. That's why NVIDIA is a winner. Back in late March, we kind of wrote a piece on generative AI attached to the semiconductor industry. And we said there are going to essentially be four major winners in the semiconductor side of things here over the next several years. And the four names we pointed to was one, NVIDIA, two, AMD, and those are clearly are more on the GPU side of things and makes all the sense in the world. The other two plays are more on the networking side of things. So Marvell was the other one, as well as Broadcom, which is the only company that is yet to report. But nonetheless, those are the four companies we think that you need to continue to kind of pile into in the coming years. Not necessarily saying that there's not going to be pullbacks here, as there always is within the semiconductor universe. But if you're a smart investor out there, you're going to capitalize on those pullbacks and buy those four names here ahead of this kind of AI multi-year boom here.
I had a sneaking suspicion those would be the four names, the other three names, I should say, that you mentioned, especially Marvell, because there have not been very many conversations the last week or so involving NVIDIA that have also not involved Marvell. At least so far in trading this week, the two stocks have not necessarily moved in tandem, nor will they likely continue to. Obviously, they're different companies. What portions of NVIDIA's AI business do you think is best set up for success, and where do you see headwinds or challenges facing the company in the quarters ahead?
Yeah, listen, as far as NVIDIA is concerned, they're firing on all cylinders right now. And I'd say, clearly the biggest opportunity is on the data center side of things here over the next 3 to 5 years, not only in the next quarter. If you kind of look at the guidance for the July quarter, it essentially implies almost a doubling in terms of data center revenue on a quarter-over-quarter basis, which is absolutely remarkable and something that's just unprecedented, at least on our end of things here on the semiconductor in the semiconductor space. Now, that really is the opportunity where there's potential more upside here over the next couple of quarters if we get more traction. From some of these cloud providers, I think a lot of people forget this is a year that started off where most of the cloud players in the tech industry was focusing on the year of efficiency, right? And to a large extent, that's still in place. You've got all these companies, for the most part, reducing headcount to a large extent in the first half of the year. And you've got all these companies, for the most part, keeping CapEx relatively in check, more along the lines of kind of just pushing certain CapEx spend from one area of what they do to another. So essentially maybe going from storage purchases and shifting that to compute intensity purchases on the GPU side of things. So what NVIDIA is doing this year, in a year where you're not necessarily seeing a massive pop in terms of CapEx spend, is just phenomenal in nature. So if we continue to see follow through in terms of the CapEx spend from some of these cloud providers going into 2024, and a lot of that depends on the macro side of things, I think you have upside there. And I'd say also on the gaming side of things, that is an area that got absolutely hit in calendar 2022. We saw about a 55% decline in terms of revenue over a 2-quarter span. Over the last 2 quarters, that revenue has kind of progressively improved, from some new product rollouts. And we do think there is opportunities on the gaming side of things over the next couple of quarters. Jensen Huang just recently alluded to the fact that AI is going to get more entrenched on the gaming side of things, talking about conversational AI in non-player characters. So, be on the lookout for stuff like that. So there are opportunities, we think, on both sides of things. And then, of course, in autonomous vehicles, again, that's probably more forward-looking in nature, but we're talking about very low run rates right now. The business did double here on a year-over-year basis in the most recent quarter, but we do think there's significant upside, but that's more kind of 25, 26 potential.
Angelo, you teed me up perfectly for my next question, which was some of these new announcements from Nvidia's CEO, one of which you just alluded to, NPCs, non-playable characters. We actually talked about this on our Public Live Closing Bell show just yesterday, this gaming product to help improve essentially the intelligence of non-playable characters instead of having them sort of refer to a bit of a pre-written script. Perhaps there's more of an AI generation component about this. Talk to me more about any expectations or hopes that you have for those products and any thoughts. And I guess it kind of related. Are you a gamer? Is this something that excites you personally as a consumer? I just wonder. I don't know this about
Yeah. Yeah, listen, I'm not the biggest gamer in the world, but I do have a colleague, and she covers gaming stocks, and she loves it, and we kind of talk gaming all the time. But listen, as far as kind of the opportunities there, I'd say there's at least given the current run rate right now, I think there's some significant upside potential in the gaming side of things because of what we just alluded to. Now, we don't have necessarily any expectations at this point in time and how some of these kind of products will roll out over the next couple of quarters, outside of the fact that we do think the gaming side of things is clearly bottomed here. And now that they're clearly lapping some easy comparisons as we go into the second half of the calendar year and into early 2024, I think they're going to see some very impressive growth rates coming out of their gaming side of things, which, in the most recent quarter just saw a year-over-year decline of 38%. So I'm very excited in terms of the opportunities in gaming. Don't know as much of it as probably some others do. But yeah, I think there's some great opportunities on that side of things.
There's a lot for me to get caught up on, and AI certainly was not then what it is now. Let's talk more about raising the price target on a stock like Nvidia. We alluded to it earlier today, or earlier in our conversation, rather. CFRA recently upgraded that price target to $4.15 a share, maintained the buy rating on the company. What aspects of that business helped lead to that particular price upgrade? What would you want people to know?
Yeah, listen, as far as the reason we kept our buy recommendation, and listen, I'd say the biggest question we're getting right now in terms of Nvidia is one, clearly the sustainability of certain order run rates, but also the valuation side of things. To what extent is the valuation excessive? And in our view is, if you have to be more forward looking in nature when you start thinking about Nvidia and of course the AI opportunities out there. And I think kind of after what we saw in 2022, where the market got very nearsighted in nature and kind of focused only on near-term profitability, I think the market is kind of realizing, hey, listen, there's some enormous growth opportunities here in tech, specifically related to AI, and the winners out there should get a higher multiple. So when we think about Nvidia, you're looking at probably a low 40 type multiple currently for the stock right now, based on our calendar 2024 estimate. Now, when you actually look at the company on a historical basis over the last kind of 5 to 7 years, the average range in terms of the PE has kind of been around the mid 30 to kind of low 40s PE range. And kind of in an extreme points, we've seen it get to kind of the mid 20s at one point, and then of course as high as 60 times when you're thinking about late 2021, where everything just got a little bit out of hand. So when you kind of look at the multiple right now, we think if you're a bull, you shouldn't feel you shouldn't feel too worried about kind of the valuation, because it's clearly in line with where we've seen in the past. And given our view that long term, this is a company that can grow earnings at about 20-25% annualized pace, that low 40 PE multiple is going to actually look very attractive here over the next 2 to 3 years.
How has Nvidia been able to manage or maybe improve on some of the challenges that it has had, like everyone has had, with regards to supply chain constraints? And is that something that you view as a potential challenge the company will have to continue to sidestep as, honestly, the entire world continues to pull itself out of grinding everything to a halt during the COVID pandemic's early days?
Yeah, listen, I think as far as supply constraints are concerned, I think the macro side of things corrected a lot of that out here over the last couple of quarters. Not to mention, there's been some significant supply growth on the foundry side of things that has kind of helped the situation as well. So improving, higher CapEx spend, resulting in kind of higher capacity on the semiconductor side of things, coupled with macro challenges, has kind of led to an easing of the supply constraints all around. Now that said, also clearly the bump up we've seen in terms of the growth rate for Nvidia here on a quarter-over-quarter basis does mean that Nvidia has to ensure that they have the proper supply. Specifically for Nvidia from Taiwan Semi, as Taiwan Semi is their exclusive foundry partner. So we believe they will be able to do that. And a big reason for that is Nvidia, Taiwan Semi does work with their largest customers, which is why a company like Apple has been able to do so good, or was able to do so good during the pandemic. Nvidia, Qualcomm among kind of their top 5 customers on Taiwan Semi side of things. So Nvidia shouldn't have an issue here, we think, over the next kind of quarter or two, but definitely something to be mindful of.
Are you equally mindful of geopolitical risks to a name like Taiwan Semi, given the fact that, yes, Nvidia is heavily reliant on Taiwan Semi, but Taiwan Semi in its own right has one of the largest market caps in the world. And hey, I'm sure you heard the recent comments from people like Elon Musk who say, in terms of the Chinese government, they need to be taken at their word. And I'm curious to what degree you may or may not be concerned about that particular name, especially as it relates to a company like Nvidia.
Yeah, I mean, listen, last year we had written a piece about our top 8 concerns about the semiconductor industry, and clearly Taiwan Semi was the number one concern that we had, and not necessarily in terms of probability of that event happen, but more so of what the impact would be if we were to see such an event take place. So that's kind of your black swan event in many respects. We've placed less than a 10% probability of that happening here over the next 2 to 3 years. But of course, I mean, that's something that you definitely need to be mindful of. I think the other big risk out there is, of course, kind of directly China related as far as the restrictions are concerned. I mean, currently, NVIDIA's most advanced H100 GPUs aren't kind of getting sold into China. Thank God they have a ton of demand out there, and they're able to continue to sell some of their kind of older chips out there, and they've been able to circumvent a lot of the concerns out there. I think Jensen Huang also kind of making a visit for the first time in years, into China. So we'll see what kind of comes out of that as well. But I'd say those are probably the 2 biggest risks out there. But the Taiwan thing is clearly the biggest concern of ours at this moment.
And I know you're not alone in that. Angelo, before I let you go, what is the biggest part, if there is one, of the overall NVIDIA story that you don't feel is getting discussed enough?
For us, it's, I think there'd probably be 2 things. One's bigger than the other. I'd say one is the gross margin expansion story, as kind of data centers become a bigger and bigger theme out there. And, NVIDIA, continues to kind of see, growing emphasis towards its next generation H100 GPUs and chipsets out there. I think it's going to command significantly higher prices and higher margin potential. That's maybe kind of being a little bit underestimated by the street. I think kind of the other big thing out there is the autonomous driving capabilities. A lot of times these kind of new emerging themes don't kind of get fully embedded into those estimates until it kind of hits you right in the face, like we just saw in terms of the guidance that the company provided in the July quarter. So autonomous cars, we think, are going to provide significant upside to the street estimates as we look kind of towards 25, 26, 27, not necessarily here in 23 and 24. But I think that's something that clearly is going to drive upside potential, both on the hardware and software side of things. So if you're a long-term investor, I think that's something that you can at least hang your hat on right now.
All right, my special thanks there to our guest for today, Angelo Zino, Vice President and Technology Equity Research Analyst at CFRA. Angelo, thank you as always. Nice to have you.
Great. Thanks for having me.